Annual payments are amazing for business owners, but they can cause an accounting headache if you're not careful. You've likely taken advantage of a deal to receive a subscription at a reduced price for a discount, and maybe in your business you offer your customers an annual payment option. Annual payment options are amazing on both the expense and revenue side of things, but don't let it become a cash flow nightmare, especially since cash flow issues are a top concern of most small business owners. In this video, I'll help you understand how to track and manage annual payments so you stay ahead of things and better manage your cash flow. Before I get into it, let me clarify that what I'm saying applies to businesses using the accrual-based method of accounting. If you're using the cash basis method of accounting, this video is not for you. Accrual accounting can be more complex, but it provides more accurate records because revenue and expense transactions are recorded when they happen versus when the money is received or spent. For revenue, you record it when you provide the service versus when the customer paid for it. For now, I'll leave it there because accrual versus cash basis is a separate topic on its own. I can record a separate video about it and make it very easy to understand. Okay, so back to annual payments. What are annual payments? Annual payments are when the payment for revenue or an expense that has a monthly benefit happens one time per year rather than each month. And here are a couple of examples. For revenue, let's say you provide coaching services that include a monthly service package, and you allow your clients to pay upfront for the year instead of paying each month. Or you run an online community or membership that includes monthly services, and you offer your community the option of paying for the year upfront. You are likely to offer a discount for the annual payment. Or you may even require an annual payment, which is typically the case for higher level masterminds. In addition to the influx of cash, upfront payments allow for more stable cash flow planning, and it also provides continuity in your members, reduces churn, and allows you to better plan service delivery. On the expense side, maybe you invest in coaching or mastermind yourself and are required to pay upfront, or you choose to pay upfront for a discount. This can also happen for smaller recurring expenses like software subscriptions. The discounts can be significant for paying for a full year, and sometimes you receive additional benefits for making a yearly payment. The businesses offering this to you do it for the same reasons you do it in your business. Again, these payments on both the revenue and expense side can have a big impact on your cash flow, so it's important to track them carefully. Before we get into tracking, let's talk about the challenges of annual payments. If you're not careful and not properly planning or monitoring, large annual expense payments can catch you off guard and be an unpleasant cash flow surprise. Because they only happen once a year, they can be easy to forget and can be overlooked when reviewing your monthly budget and planning for monthly cash payments. And let's say if you're not paying attention, or you or your bookkeeper records the full expense in the month it was paid, you'll see fluctuations on your profit and loss statement that will make it more difficult to analyze your actual business activity. On the revenue side, you may get excited by the influx of cash and think that means you have more money to spend, and ignore that that payment is allocated towards service delivery in the future. If you spend the money because you have it, you may run into issues in the future when it's time to provide the service. If you record the full amount of revenue when the cash is received, the income on your profit and loss statement will appear overstated, and it'll be more difficult to analyze your operations. These issues can create unnecessary confusion, but it's very easy to manage with the right approach. So, how do you manage and track annual payments effectively? First, let's talk about the accounting side of it. And I promise I'll make it easy, even if you hate numbers, which I talk about in a different video. On the expense side, let's take the example of a software subscription. Let's say the annual cost is $1,200, which is $100 per month. When the $1,200 appears on a bank or credit card statement, that transaction would be categorized as an expense account in your accounting system. Let's say the account is called software, and instead of categorizing the full $1,200 payment to software expense in the month it was paid, this is what you'll do instead. You record the $1,200 payment to an asset called prepaid expense. Remember, asset accounts show up on your balance sheet, not your profit and loss statement. And for each month of the year that you are using the software, you reduce the prepaid expense by $100 and record $100 as software expense. At the end of that subscription, the amount in prepaid expenses for this subscription is $0, unless you make another annual payment. And then on your profit and loss statement, you'll see $100 each month. Now, this may sound like a lot, but the good news is that you can do all of this at once when the annual payment is made by recording one big transaction that includes the various dates throughout the year. Your software makes it easy. The transaction you'll use is called a journal entry and is different than categorizing bank transactions. If you're using a spreadsheet to do your bookkeeping, that's also easy to record each month at once. It's a similar process for revenue. If a client pays up front for an annual service, again, coaching services or a monthly membership, the annual receipt is recorded to an account, and each month, the monthly portion of revenue is recorded. This time, the annual receipt is recorded to a liability account that you will name deferred revenue. This is because you've received money for a service that has yet to be delivered. So technically, you owe something to your client. And again, the liability will show on your balance sheet, not your profit and loss statement. Your profit and loss statement will show the monthly revenue amount. Now, keep in mind, annual payments for revenue happen way more often, and your bookkeeper can record these transactions in a certain way to streamline the record keeping. And if you're doing your own bookkeeping, just consider batching transactions together. Overall, this approach not only gives you a clearer picture of your business's financial health, but also makes it easier to budget and plan and see what's happening in your business. And a quick side note, if you're listening to this and you're thinking, wow, I haven't been doing things this way, that's okay. You can share this information with your bookkeeper and they should know how to make the proper adjustments. Now, if they are not familiar with accrual-based accounting, it may be time for a new bookkeeper. And if you're doing your own bookkeeping, you can make the necessary adjustments. If you're adjusting transactions that were already recorded, remember to only make adjustments that occurred in the current fiscal year. And for most businesses, the fiscal year is a calendar year. And one last thing that adds a layer of complexity, there are tax implications to look out for if you're switching from cash, accrual, and vice versa. And for taxes, you can elect either accrual or cash basis, even if what you're doing in your accounting system is different. Either way, if you're making a change, please consult your tax accountant first. Okay, let's talk about some other practical things you can do to manage annual expense payment. Here are 3 tips. 1, maintain a list of annual expense payments and incorporate them into your cash flow forecast. 2, for the actual payment, add them to your calendar so you just monitor them in your accounting system. Again, this can be done in conjunction with a cash flow forecast if you're using one. 3, create a reserve fund. Set aside a portion of your revenue each month to cover upcoming annual payments. So there's a lot to consider here. Again, the reason for recording your annual payments this way is to get an accurate picture of your operations to help you better analyze your performance and what's happening in your business. This method is best used with cash flow forecasting. Annual payments don't have to derail your finances, and they can be very easy to manage. If you're ready to simplify your finances and master tools like these, I welcome you to join my free school community. When you join, you get access to a step-by-step system I created that guides you through implementing the right accounting tools, systems, and processes, and who you require for outside support at every stage of your business, from startup to making multiple millions. This also includes the knowledge that's key for you as the business owner, even when you've hired accounting help. I'm here to help guide you step by step on how to master your finances and set your business up for long-term success. I'll even help you hire the ideal professionals when you're ready. In addition to the step-by-step system, you also get access to our weekly Q&A sessions where I show up live to answer questions. I'm also available in a group to answer any other questions, and I provide additional financial management resources. Click the link in the description to join us. I look forward to meeting you.